Good evening, or almost good morning. This is Jeff Scott. It is almost the end of November 8th, 2015. As you can see in the lower right-hand corner, it is actually 11:22 p.m. Because of the late hours, futures are open, and the world is trading up. We're not doing much here. Dow up 16, S&P's up 2, NASDAQ up 10. Russell, the big star of last week, also up over 2. If you look at Asia, you could see the Hang Seng, the Nikkei, STI, and the Shanghai are all up nicely. Australia may be down because they're so tied to gold, silver, and with the strong dollar, not good for the minerals. All right. As always, I'm going to start with a quick PowerPoint review last week in a spreadsheet, look at some charts, and try and get done with less than an hour tonight. The title for today is Banking on Higher Rates. Rates popped after employment numbers were so strong, and the odds of a rate increase went up for December. It was pointed out tonight at dinner with my buddy John Person. He felt that even though the numbers were so good, that he thought it was not a shoo-in because it's possible that the Fed could elect to not raise in December before Christmas. I'm going to be in the school of rate rise as possible, and I think it's more priced in the market than it was a week ago. Disclaimer, this is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am truly independent. I paid for all the tools that I use. No one pays me to talk good things or bad things about them. And trading involves risks, and you alone are solely responsible for any decisions that you make. I've cleaned this up a bit because there's really two schools that I deal with. One is CanSlim, as taught by O'Neill, modernized by Morales and Katcher, and made electronic by Woodward and Brown. John Person, what a great guy, teacher, trader, educator, friend, author of some great books, and invented a number of setups that I use on a routine basis. And then a little bit of Van Tharp for position size money management, and my buddy George Lee. George has a meeting next weekend, which I guess he added an online component. Sounds like it'd be a lot of fun. I wish I could be out in British Columbia participating with him and Chris. I have a lot of programs. I try and hide them purposely at night. I need a real-time trading platform, of which TradeStation, Thinkorswim work great. I also like Genesis, but I recognize that its price and lack of connectivity and being paid for by any trading company puts it out of the reach of most, and so I don't use it often on these videos. For analysis, it's HGSI and EdgeRater with a little seasonality thrown in for fun. I like to look at last week first, and I'll look at it several different ways to kind of get a clue as to where this market might be going. I call this the sector review. This is a space out of John Person's workspaces where he looks at the market as a whole. I've got to update a few things. There's been some M&A activity and housing that I need to replace those. But if I look through, what do I notice? The green looks like it's in the financials, regional banks, insurers, broker-dealers, and even credit cards. No surprise with interest rates going up, and this is just Friday's performance. And concurrent with interest rates going up, REITs and utilities were down. If you watch my videos at all, that should not surprise you. Major markets tell the story. ES, NQs, and YMs rather, have all taken out and crossed back above their 200s. Notice the 17 is now crossed above the 200 across all three. It'll be nice when the 50 crosses above the 200 as well. The small stocks down here, the TF futures lagging, but had a great week last week, up each day, getting close to their 200-day. The VIX down, sort of basing, and the dollar rising quickly after those interest rates. With the interest rates going up and with improving employment. On Genesis, you could see that we ended the week. Everything is in a buy mode. This is a 60-minute chart, and this is the E-minis, the NASDAQ, the TFs, NYSE, and YM. And you could see by end of day Friday on the 60 minutes, on the daily, and on the weekly, we're in buy signals everywhere. And you'll notice that the angle of pretty much across the board, except for perhaps the OBV and the NYSE, have been all heading up, with volume leading the market higher. I mentioned interest rates on the week. They were up 0.88, almost 4%, closing at 2.33%, or 23.33 in Warden on the CBOE 10-year Treasury Yield Index. As I've had here for months, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. Rising rates are good for banks, especially regional and insurers. If you look at AD lines, they've turned up on the weekly and the daily. If I look at participation, the number of stocks above the 200-day SMA rocketing back up, as is the stocks above the 40-day SMA. If we look at our canaries in the coal mine, for those who haven't been here before, we have a list of some of the leaders over the last couple of years. Facebook, Netflix, Google, Apple, Amazon, Priceline, LinkedIn, and Tesla. And we create an artificial index of those 8 stocks within HGSI. And we kind of suspect that the market will pretty much follow what the leaders do. It's done it in the past. And we look to find evidence of the leaders breaking out or the leaders breaking down. And you could see we can go back several weeks, about 15 trading days, and you could see a gap up in the canaries and a big move up, almost starting to look like they're going into a bit of a climax run. But the canaries are at new highs, showing the strength of the markets, especially the NASDAQ and the NASDAQ 100. Curiosity, I was kind of wondering where we were for the year. So on the left, we have 1 week performance, and you can see that the Russell, which is flat on the year, but positive flat, was up over 1% last week, which took it from being minus 1.17 prior to that for the year. So you have the 12th year to date since January 2nd on the right and the month of November on the left. So you could see for the year, the NASDAQ is the leader, up 8.89%. In fact, at this point, all the indexes except for the NYSE are in the positive, but the S&P's at 1.99 and the NASDAQ at 889 are the big winners. Interestingly, the S&P was actually down a teeny bit over the last week. From a sector perspective, the big loser last week was utilities, no surprise, with rates going up, and that should mean that financials were up, and financials were the big winner. For the year, the big winners are cyclicals and technology. Energy, utilities, the big loser. Healthcare has been up and down, at up 3.5%, and technology is up 6.86%. Market thoughts, short term, positive week again for the markets. OBV and AD lines leading us higher. Market participation improves. Small stocks rally on the week. And leadership in financials, insurers, semiconductors. Airlines still look strong. Boy, Hawaiian Airlines, wow. And bottom fishing for energy looks in vogue as well. Longer term, take a look at 2011. That's kind of what this feels like, although we're recovering quicker. Is this correction over? Are we still in a topping period? I think those are two questions. I think the correction certainly appears that it's over for now, but we are in the later stages of a long bull, and I don't know if a 2 or 3 month, 4 month pullback after a sideways correction is really all that we're going to see. As we've said multiple times, one expects year 3, and in this case year 7 of a presidential cycle, to be positive. Year 8 and year 4, year 8 for a 2-year presidency, are not as positive, and that's what we're going into next year. We're still going to have the issue of a worldwide economy that's questionable, with almost full employment here, and the Fed under pressure to raise. Risk management always is prudent, although I have to admit over the last 2 to 3 weeks I've been taking bigger position size. We've clearly had a nice move off the bottom, and hopefully this move will continue despite a potential for a rise in rates. Remember, patterns are cyclical. We certainly fell down here in stage 4. And now the question is, are we getting ready to start a new buy signal? I think we're probably already in it. and therefore I've adjusted. I've been buying stocks and calls, selling some puts. I'm not a big covered call fan early in a rally, and we're getting to the point where maybe it's makes more sensible for me to start selling some premium, and also looking at bull put spreads as another way to gain some premium. Um, you know, for the most part, this year we've been in this very top part of this, and every time it looks like we're selling, we start to recover, almost like a sine wave. I'm not convinced we're out of that pattern. So we're not at new highs yet. New highs will make me feel better. So although I am much more aggressive now, I do think it pays to maintain some caution in this market. Know your news and earnings dates. The big Friday's out of our way. We've got some PPI numbers coming in, continuing claims. I suspect now we're going to be looking for positive information throughout the week to keep the sentiment that the economy is improving alive, and so that when the rates go up in December, if they go up, the market will be expecting them, anticipating them, and hopefully already have digested them. Lots of earnings still. You need to know your earnings dates. So as always, those are my intro comments. We're going to look at the market and some from EdgeRater, some analysis, and then jump into our favorite programs. And we'll come back to the chart of the week. First thing, last week was a great week for me, great week for the types of stocks we follow. I had a lot of possessions going into the week in my various accounts, and I don't certainly recommend people have 50 positions, but I have it spread out with a number of different places. But bottom line is, had I held my positions at prior week Friday, I'd be up 3.28% on the week. That's pretty exciting. The HGSI and IBD indexes were up about 2%. My buy picks from last Friday night or last weekend were up 1.42%. And the Market Smith 250 up 1.2. S&P, the way that we calculate from Friday end of day to Friday end of day, was up 0.95. So I look at that and I see what was a very powerful week and a great week for growth. Now, one would not expect a Hindenburg, and we did not see one. Interesting, the only thing that we don't have is new highs and new lows both above 2.2, where the new highs are still less than 2%. That's interesting because as we start to get higher, we may start to fire off some Hindies after this nice run-up. But as I look at the number of new highs, we're still not firing a lot of new highs. On Bucketology, you could see that about 13% of the S&P 1500 is above their upper Bollinger Band. That is not an extreme number by any means, 60% above the midline, but we're certainly showing that we've had a nice little run up and stocks are starting to get extended. On the Woody indicator, we could see it's all green, except for in the NYSE, which we saw in earlier things, looked a little bit weaker. No recent kahunas. From a seasonality, as I pointed out last time, we are definitely in a strong seasonal period of stocks. And there are a number of stocks that have, here's 3 stocks that have been up 19 out of 20 years. Rockwell Automation, average 8% return. IDEX, averaging 5%. Omnicom, only 4%. If I eliminate, I'm only looking here, by the way, at the 1 month category. If I eliminate stocks that don't have less than 8 positive numbers and have less than 3 down weeks, these are some things that popped up. I'm going to skip Cogent because the CCOI, because it was negative 9 out of 13 weeks, 13 times for the next 2 weeks, despite being positive after that. Probably have some earnings coming out at some point here. Assured Guarantee, this is an insurance company, up 13% over the next month, 10 out of 11 years. Amazon, up 11%, 15 out of 18. Since I have a huge position there, from my lips to God's ears, that would be a wonderful thing to see. The Middleby Corporation up 17 out of 20 years, 7%. Transdigim up 5%, 8 out of 9 years. Rockwell Automation, here it is again, 8% up 19 out of 20 years. Clear Channel Communication up 9%, 9 out of 10 years up. So there's a lot of stocks, if you're a fan of seasonality, to go fishing from. If I only look at stocks with 8 or more down years and no more than 3 up years, there's only a few. So it might be worth looking at what these are. You notice the dry bulk shippers, Eagle, Diana. So that tells me something that I don't want to be in dry bulk shipping this time of year. Allen USA actually pays like a 17 or 18% dividend. Looked interesting, but it's down 8 out of 10 years. Don't want to be playing there. You notice that the ultra shorts of the Dow, the S&P, the short Dow and S&P are down. That's pretty exciting. Look at this. The short Dow and the S&P have been down 9 out of 9 years. That should just reiterate that this is probably a time of the year to be positioned long and not loading up on the shorts. All right, what do I want to do now? Let's open up TradeStation. Let's very quickly look at the status of the markets. This is the same analysis I do every week. I'm going to go quickly because they're all good. What I'm looking at is the color of the paint bar. Green is the paint bar color comes from elder green, means the buying window is open. It's okay to hold or buy. Red, the selling window is open. It's okay to sell or hold. Blue, you can buy, sell, or hold. I'm also looking at these little red dots on the top, which are MACD divergence. When they're green dots on the bottom, it's convergence, and both could signify change in direction. And then the arrows represent person's buy and sell signal. And pretty soon we're going to have to start thinking about extension and the high jump. Leave that for the next time. So here's the big change. For the first time, we now have a buy signal on the monthly, buy signal on the weekly, buy signal on the daily. In Elder, the daily turned blue, which just showed a little bit of sideways motion. NASDAQ looks very strong. Looking at the Dow, also blue, but buy, green on weekly and monthly. Little bit of a weakness this past week in the Dow Industrials, kind of a sideways movement, while the weekly and monthly remain very strong. S&P 100, same thing, buy signals throughout. The SOX, strong day on Friday, actually reversed a red candle from the elder signals, but in buys from all time frames on John Persons indicators. And the S&P, blue, but in buy signals in all 3 time frames. And then the IWM represented the Russell, strong leader last week, green across the board. Has not gone to a buy yet on the monthly. That probably happens this week or soon after it gets above the 200-day moving average. A lot of strength. Let's open up HGSI. Let's go to Woodward and Brown user groups, Major Market Plus, and let's go to the top-down view. This is all price and volume. Okay, and you can see here small caps and the dollar led the way. Gold, miners, utilities, oil, T-bonds, volatility, silver to the bottom, and the NYC with the weakest of the indexes. If I look at 5-day performance, led by the Russell and the small caps at about 3%, gold getting hammered with the dollar strong. Let's take a look at our favorites. Start with the S&P 500. Since there are no kahunas in the last couple of days, I'm going to go into the simple view here with just moving averages. For those that are new, I've got Hindis on top, which are not an issue right now. I got daily and then weekly bongos, both green and supportive. You know, Friday traded down on the high, the good employment numbers with the fear of rate increases coming. Closed right where it opened, a nice doji there. Really looks like this is ready to go higher in my mind. I had thought we might see a retest of the 500, excuse me, 200-day moving average, but we opened up the week higher and never came down. That is the S&P, looks very strong. If I take a look at the Dow, looks very similar. This is the 8-day exponential moving average. Notice how it's sort of been support on the way up, and that both Thursday and Friday we traded down to it and bounced off. Bongos are green. Now the Dow consists of a lot of it has a transport average, and you can see Dow Jones transports look pretty darn good. They haven't broken out above the 200, but the bongos are both green and holding their own. Unfortunately, you can't say that about the utilities, and no shocker with conservative interest rates going back up. The utilities had a very rough day with the bongos going red on both the daily and the weekly perspective. Continuing on, let's take a look at the NASDAQ. This is probably as strong as it gets. Let me give you a little bit more data here. Getting very close to this line here, which was resistance in the past. That will be the big thing to see this week, is whether or not the NASDAQ can break out above prior highs. One would think that back here, which was July 20th, when the NASDAQ got up to 52.32 or so and stopped, that's going to be a tough place. And we closed at 51.47, so that's about 80 NASDAQ points before we run into what's probably going to be pretty substantial resistance, which will be the highs of the year. The Russell 2000 has a ways to go to get to resistance, and its first resistance will probably be the 200-day moving average. Long ways to go, I should say, to get back up to highs. Notice that the weekly bongo on the Russell actually went green on Friday. For those that don't know the bongo, let me just talk about it, because I did add it to the PUG discussions, and I know several of the PUG people picked it up. The bongo is an indicator that I helped develop a long time ago. The intent of the bongo is it sort of gives you a sense of the long-term and short-term trends, or daily and weekly trends. And I actually, in other programs, have taken the bongo to monthly and beyond, and in shorter time frames as well. It's 3 Wilder RSIs, its price and its moving average, and it's really the relationship between them. If I go and I edit indicator, you could see these are the 3 different RSIs, the order that it has to be in, price above the 9-day moving average, yes is green, red is no, and it really is a nice signal for getting you in and out of the market. It's not an early signal, but I don't like to take long. I don't like to go long. 3 times for Mitzi. Well, she's worth it. The weekly bongo being red. I would not have gone long during that period of time, and you could see that kept you out of trouble. So Russell, that's a pretty big deal, turning green. Let's look at the dollar, talk about a big deal. Dollar gapped up on Friday after those numbers came out for employment, and notice its bongos went green as well. Volatility, on the other hand, near the bottom of the list, not quite as low as it gets, and could drop 2 or 3 points, and we'll be looking to see if and when the volatility can get and stay above its 200-day moving average. Gold, you would expect to have gotten hammered with that dollar, and you wouldn't be denied. As I've said many times, I am not going to get long gold until I am convinced that we're staying above this 200-day moving average. And had a nice little fake out here. But really, for the better part of a year, we have lived below a falling 200-day moving average, and we are dropped down to our annual lows just about on Friday. And silver, more of the same. Also got hammered. So strong markets, weak metals. No surprise that when I looked back here before, that the ASX, the Australia, was the weak player. All right. Let's look at industry groups. I have 174, and let's look at them with the 2-day force. You could see of the 174 groups, 64 are up. Unfortunately, one of them doesn't really count because that is the index of indexes. Let's see if I can nail it. Hit delete. Excellent. That should take care of it. All right. Interesting. On my two machines, I got different results. But basically the same things in a different order. The leader, semiconductors. NVIDIA had a huge move. Now, it says earnings were 210. I suspect that earnings were out last week, and I bet if I do right-click, more info from web, and I go to FinViz, it'll probably tell me that. After stellar earnings. So let's go into my dirty charts. So what do I see? I see my bongos and forces have gone green. I'm accumulating. I had a Bible gap up, a mobile breakout, relative strength versus the S&P turned up, and I had a big kahuna. So a lot to like on this chart. What's not to like is that it's already had a pretty substantial run. I don't like the earnings coming up, although I'm looking for revisions. It does pay a small dividend. So probably not my favorite stock in the group. Qorvo, a little bit more interesting in my mind. It had everything up here is green, a mobile breakout from a squeeze. Look at the group strength leading higher. Gapped up from a big downtrend on Friday, and this is one that I put on my buy watch list. But just to make sure. Next one is Skyworks. Like this one a lot as well. Not as deep of a pullback. Broke above the 50 on a kahuna. In a squeeze. The weekly bongo is still red. That's a little bothersome. But this one looks very interesting as well. As does Avgo. Earnings are slowing down, which is a negative. It's a Broadcom, I believe it's about to close on. Mobile breakout from a squeeze with a big kahuna and a pocket pivot and a PSAR reversal. It's an expensive stock, but probably of the three, Avgo, Skyworks, and Qorvo, this is probably the lowest risk where you could put your stop here underneath any of these last bars. I went back to this bar here. Trades above the high of the day might be interesting. Avgo, all three of these, frankly, look attractive. Right-click back. Next one down are banks. No surprise that banks look strong. Now here's my problem. How do I pick one? And these are stocks that have been beaten up. I'll show you a couple that are my favorites. Here's Citizens Financial Group. Earnings per share not so hot. Did gap up. Bible gap up. Broke above the 200 in a kahuna. U.S. Bancorp broke up above the 200. Pocket pivot, kahuna, mobile breakout. Pays a 2.3% dividend yield. PNC Bank, KeyCorp did not get above the 200. Regions broke above the 200. So many choices. The ones that I own, I own two of these. I've been owning Bank of the Ozarks for some time, and you'll see it came up here, somewhere around here. We had a Eureka on the market, a kahuna, and a mobile breakout, and it broke above the 8-day exponential. I've been long since September. Had a big move up on Friday. Does make money, pays a 1.1% dividend. With that gap up, I'm going to probably raise my stops. But one way to play this, frankly, on the regional banks, just by KRE, which I have a position in as well, broke out. Doji there, I might see if it wants to come back in the beginning of the week. But if rates are truly going up, it would not shock me to see interest in regional banks. And we are at a multi, going back to 2011, breaking out to a new high. Let's get monthly. We are gone back to 2008 highs. So I think regional banks are, as Kramer says in Fuego, one way to play them is with the ETF. Internet media. This is Yoku. Gapped up. This looks like it was a takeout, and then it gapped up. Maybe somebody else came with another bid. Huge volume on Friday. Don't know anything about this guy. So quick look at FinViz, never hurts. All right, Alibaba's buying them, that's why. Facebook. Facebook is one of my larger holdings. I've talked about it before. I think many people have a big position in Facebook. Certainly looking at it going back for a year, it's been a nice uptrend. If we look at a weekly, it's a beautiful uptrend. Really broke out in the summer of 2013. Is it getting extended? Absolutely. Let's take a look at that high jump on the daily. You see we came up to the top after the gap up earlier in the week with earnings. Gave up a little bit on Friday after a huge day on earnings. I think Facebook goes higher. It may take a little while to digest this earnings report. Baidu doesn't have the same earnings growth power as Facebook. It's minuses here, but did break above the 200. Anything else here to point out? Google or Alphabet, what a great move since July. Gapped up with earnings sideways, and then before the beginning of October, after that August 24th sell-off day, just a great move up. And as I mentioned on the Canaries, some of these moves are starting to look a little bit not climactic yet, but are getting close. Kihu looked interesting. Coming off the bottom, you can see the group strength. Everything is green. Lots of pocket pivots and kahunas. Earnings are now starting to grow in the stock above multiples. Kihu looks interesting as well. Earnings not out yet, and please be careful about earnings. Right click back, specialty pharma. These have been beaten up a lot. ZS Pharma is up on an acquisition, so we don't need to spend any time. It priced up there. If you owned it already, God bless you. If not, it's too late. Here's one that I've been in and out of. I'm back in with some January 17, 2017 leaps. This is not Valiant. This is a company that's made a number of acquisitions. It is in a proxy fight now at DepoMed. But what's exciting about this guy is that they bought some rare orphan disease drugs, and there is major pricing power there. So they're sort of reshaping itself after some of the past acquisitions. I think long term this is an interesting play. Obviously, it sold off hard. It's going to have some resistance at that 50, despite the fact it had the gap up for the mobile breakout and the squeeze and a big kahuna. I'm not sure I'd chase it right here, but I'd leave that on your radar after it quiets down after this move. Mallinckrodt, the old Questcor. I like to see it get above the 50 before I get excited. Acorn, I like to see an accounting report. These guys have not reported since probably February when they've had all kinds of accounting irregularities. Frankly, the stock looks like it's turned around. Earnings are coming back into the stock. They've brought in new CFOs. If you like rolling the dice, maybe you buy some out of the money calls, cheap calls, because one of these days they're going to report and they'll probably, hopefully they won't announce anything horrible. I don't have a position at this time. To me, it's a little bit like gambling. Diversified banks. We looked at these last week, I think the week before. What a big move by Bank of America. It's about to challenge its 18.5 highs. If we go back, weekly chart looking back several years, it is getting to a point where it hasn't gotten much beyond. Now, if rates are going up, Bank of America probably goes much higher. I have a position in this one as well. It had a pocket pivot on Friday, a big gap up, Everything is green there. It does have earnings coming in, and it pays a small dividend. Not exactly a growth stock chart. It's very up and down, loosey-goosey. But if you think rates are going up, you probably need to have some banks. Here's J.P. Morgan, big gap on Friday as well, a little bit less loosey-goosey than Bank of America. Citigroup, Wells Fargo. I'm playing Bank but America, but all of those look interesting. Application software. Data had a giant week and really brought attention to this whole group. Now the question is it going to hold above the 200 and then take off further? It had a Bible gap up, so you could set your stop right at the bottom of the Bible gap up. A lot of demand on Friday. Kahunas, mobile breakout from a squeeze. Everything is green. Group rank certainly going up, but this was on earnings. Autodesk breaking out to new highs. Don't like the earnings. Channel Advisor, don't know this one as well. Don't like the earnings. Here's one that had a lot of attention. Another Bible gap up. CALD, Calida Software. Interesting looking stock, to be honest. Don't like the idea that it closed halfway down on the day, but it did have a Bible gap up, mobile breakout squeeze, Kahuna. Probably worth looking further at. Continuing down the list of groups, wealth managers, no surprise with the finances. Not going to look at them, but all the major brokerage houses and Noah, the Chinese wealth manager, made it. Infrastructure software, Microsoft, probably needs to be changed into a computer maker. I bought one of those new Surface books, and it's not a toy anymore. I'm actually very impressed with it. Microsoft at multi-year highs. Let's take a look. Go to weekly. All-time highs, maybe? Hard to believe. Let's go to monthly. Not quite. Here's the 2000 run-up highs. High of 59.31. High of 59.97. And we are at 54.98. So within 10% of all-time highs. It's been 15 years since Microsoft has started moving again like this. Everything's green. It looks great. OBV is strong. If you buy it, maybe leave that 8-day exponential as your stop. Splunk, interesting. Had a pullback. Support formed here. Broke above the 50. Going to have resistance in $4 with that 200. Earnings per share growth is negative. But I kind of like the pullback, the base, and the breakout above the 50. Don't know Palo City. It's got some earnings coming in. Big breakout on Friday. That kind of looks like either earnings or a takeout. My guess is it was earnings related. Let's see. Sales top estimate view raised. All right. So as you could see, unlike prior weeks, we're having a lot of potential stocks to look at. Airlines, boy, have they been strong. So here's United, which is now a Dow stock. And as you could see, United is now broken above, retested the 200, and looks like it wants to run. Everything is green. OBV looks great. Earnings for the next quarter look outstanding at multiple of 5.82, probably one of the lowest multiples in the Dow. It does not, however, pay a dividend, for better or worse. Great group strength, as you could see right here. So I think this one looks very good. And if you don't have any airlines, this might be one to play with. Others look great. Here's Delta. I'm not sure this counts as a high base, but looks like it wants to run again. This has been one of my positions for some time. JetBlue, another one that looks like it wants to run. A lot tighter than the others, sitting right on in a squeeze right on top of the 50-day moving average. If it had a kahuna, it would have made my breakout from the 50 screen. I'd like to see the weekly bongo go green. All it's going to take is a move up on Monday. I think JetBlue looks interesting here. And here's Hawaiian. Yeah, sometimes you do stupid things and sometimes you're smart. I actually took half mine off the table. I had a big oversized position. I took half off before earnings, and they did great on earnings. The reason why I did that is because I looked at here when they missed earnings. And since I had a lot of profits, I decided to take half off and let the other half run. And now I'm just trailing my stop up, and Hawaiian looks awesome still. Southwest, another one that's had a nice run, broke out here. This was the time to take it up on earnings here. Looks like it's slowing down. But lot to like in airlines. And then lastly, insurance, like banks, benefit from higher interest rates. AGO is one that has great seasonality. So here's Unitrin, big move up on Friday. I don't know if that's a takeover, if that was just earnings. Let's take a look. I don't like chasing things that look like that. Kemper, that's up on earnings and higher dividends. That's always nice to see. Allstate, Hartford looks kind of nice. Pull back to the 50, trying to go. But here's a short. This is the one that might be interesting. Let's look at this on a weekly. Pretty much sideways, breaking out here with a mobile breakout, kahuna, and a pocket pivot on the weekly. I thought about making this my stock of the week. Now let's look at some seasonality on it. Hopefully I won't have a lot of modules that have to be updated. I use a number of seasonality programs. This is seasonalitytrader.com. No, that's not what I want. AGO, there we go. Assured guarantee. Let's take a look at this with a real seasonality program. EdgeRater does a great job of screening the market. It comes with EdgeRater, which by itself is about the same price as a good seasonality program, and seasonality is just one small piece. So, what does this tell me? It tells me that this looks damn good. Excuse my French. We're in a nice uptrend. Now, the bad news is you might come back down, but we're in a strong uptrend. If you'd bought November 2nd and sold December 11th, you'd expect to be up 8 out of 10 years, average up 15.3%, the average down year 0.6. That's a pretty nice return. Would have been nicer to get in back here. So I might wait for it to pull back some, but the seasonality on AGO does look really good. So that's what I basically do each night. I go through my top 10. Then what I do is I take some of my favorite stocks and I throw them into TradeStation and I apply John's indicators to them. So this weekend, I came down to, let me close this thing here. And I have my usual watch groups that I look at. And then I came up with my final buy watch list, and here it is of 51 stocks. Now, we've looked at many of these already. We're going to come back to beat in a few minutes. I'll leave that there for a second. If I do it by industry, you could see semiconductors, a couple explorers, banks were strong, lots of insurers, some specialty pharma. You don't see the traditional biotech or large pharmaceuticals. Now I take that list and I dump it into TradeStation. And I go through each of these in that list. So I looked at two lists. I looked at that list here, and then I looked at all the stocks that had weekly HCDs, and I chose the stocks that I thought looked most interesting. So let's take a look at some of them. We looked at AVGO earlier. So when I look at my TradeStation screen with John's indicators on a stock, couple of things. Orange is a high closed doji, and if it's sort of this red color here where my hand is, that's a low closed doji. High closed doji is John's greatest signal. In a downtrend, it often signifies not just a turnaround, but also a big potential good size move. I like them on weekly more than I like them on daily. The arrows are John Person buy signals, up in green, down in red. This is his histogram, on balance volume versus a moving average. Then, to keep all my stuff consistent, I have my dots. So, and this is for PUG members, I don't use the bongo as much on the weekly and the monthly charts. I use the bongo only on the daily charts because it's set up on the daily chart to give me a daily. Second dot is weekly, the third dot is monthly. On my JS combined dots, there are 7 dots. In the middle is the squeeze dot. Immediately above the squeeze dot is a mobile breakout. Above that is a pocket pivot, and above that would be a Bible gap up. Below the squeeze dot is a PSAR color, followed by a Kahuna force, and which I don't see one here. And then you have red candle highs. Actually, that's a Kahuna force. And then we have red candle highs and green candle lows. One way to figure this out, if you have my indicator set, is to go to Format Analysis Techniques, hit Combine Dots, hit Format, and it tells you a list. So the green candle high, red candle high, green candle lows, and then the bottom one is Kahuna force. So I look at this all together. I see a high close doji on the daily. We're in a buy on daily and weekly. Daily OBV is turned up. I'm not in a squeeze, but I did have a mobile breakout, a PSAR reversal, and a Kahuna force are both green. OBV is not great on the weekly, but we're coming out of a squeeze. I like AVGO, and it made it to my filtered buy watch list. Skyworks broke out. This is the 50-day moving average in white. This is the 200 in red. Notice how OBV is broken higher. Notice I had a Bible gap up, pocket pivot, mobile breakout, PSAR reversal, Kahuna force. So most of my signals coming out of a squeeze. I look at the weekly, also on a buy. This one looks excellent as well. Both these look buyable. That's why I put them in my buy list. Eagle Pharmaceuticals, this one's interesting. This is a company that's going through that transition from being a developmental company to actually selling something. Now, I kind of like that story, and often that story leads to rapid earnings acceleration and price acceleration, much of which is priced in already. But if I pull up an HGSI chart on EGRX, you notice how it's pulled up. It's pulled back to the 50-day moving average. Group rank is lousy but turning up. Notice the earnings per share growth coming in the following quarter. They've announced some deals on sales and marketing. They have a number of products coming to market, sort of a hybrid between a generic and brand where they've done some new formulations. I like this one. I think it's interesting. And when I looked at it in HGSI, in TradeStation, I see it had a weekly high close doji, which is to me more powerful than a daily. Weekly and a daily buy signal. OBV is turned up. I'd rather see OBV above the moving average, but it's turned up as well on the weekly. We'll come back to beat UVE as an insurance company. It's in a weekly buy for some time. OBV is strong. OBV went above the moving average on the daily, a high close doji and a buy signal. HEES, a mining equipment stock, and interestingly that a stock in this group would have such strong volume coming in a weekly buy, high close doji on the daily, and a daily buy, great OBV. And because of the OBV and the fact that it just closed right above the 200-day moving average, I find this stock interesting, and it made it to my short list as well. I mentioned some bottom fishing in energy. This is BCEI. It's had a high close doji on the daily and a daily and weekly buy signal. OBV struggling on the weekly, looks great on the daily. Daily and weekly bongos are strong. It had a pocket pivot and a force kahuna on the daily. This is a stock that you're basically rolling the dice on. It's been a major bottom fish, has come down substantially. But if oil's starting to run, this looks interesting. Home Depot Supply or HD Supply. The good news is I got a weekly high close doji and buy signal, the OBV trending up. Daily OBV looks great. It's in a daily buy. I like to see it get above this 50-day moving average. If so, I might be interested. Out of curiosity, let's just see what it looked like here. In a downtrend, look at that long tail in this hammer on Friday. I wouldn't touch this until it broke above the 50. I like to ultimately see it get above the 200. OBV has turned up. Look at the earnings per share growth that's going to pick up in this stock. So I think that one looks interesting, but it's still got some work to do. CIE, who is this? This is another cheap energy. The reason why this one hit my screen, let me just look at it first in HGSI with you. So this is CIE. Put it on a weekly. So this is a stock that was $30. It came down here into the $8 range, or up to the $8 range, as low as $6.50. And what I want to point out here is it's got to get above the 200. I'm not touching it until I get above the 200. And I like to see it hold above the 200. It did not. It closed above the 200 and closed down the next day. Don't like the earnings per share growth. It does not pay a dividend. However, it had a weekly high close doji. It's in a weekly buy signal. It's in a daily buy signal. OBV has been leading price. And you had a lower low without a lower low on the histogram. That's also MACD convergence. I see a lot of things on this chart that tell me that this is starting to get constructive. Something to watch. PXD is another, these are all high close dojis. PXD is another beaten up energy stock. High close doji, great OBV on both the weekly and the daily and buy signals. Nexstar Communications, high close doji, but it's really not in a downtrend. But look at that OBV breaking out to new highs. Price usually follows. Metadata Solutions, another one in it. This is probably more classic. In a clear-cut downtrend, had a high close doji on Friday with a buy signal. OBV extremely strong on the weekly and the daily. In a daily buy, broke above the 50, target the 200. That's the only problem, about a 10% move. OLED was the next one below, I think, AVGO, Skyworks, Qorvo, and NVIDIA on the semiconductors. And again, in a downtrend, high close doji, OBV turning up. Look at it happen on Friday. I had a Bible gap up, a pocket pivot, a mobile breakout, PSAR reversed, and we had Kahuna Force. But right up against the 200-day moving average, so I passed on that one. Zoe's, restaurant, high close doji, still in a sell signal weekly, so I passed on it, but one that's on my watch list. WSBC, I think this is a financial. This is a bank. I didn't know which bank to pick, but when I saw this stock in a downtrend, high close doji on Friday, massive volume, had been squeezing for quite some time, broke out on Thursday with a high close doji, and again on Friday. WSBC, if you like to be in banks and you don't want to buy one of the ETFs, this just broke above the 200. Everything is green. Don't like the earnings per share growth. Pays 2.7%. Can't argue with the high close doji and this OBV. Here's Home Depot Supply. Don't need to look at this again. Habit, another restaurant, downtrend, high close doji, OBV breaking out, coming out of a squeeze on daily. 200 looming not far above. AXLL, don't know anything about this stock. Had a high close doji and a buy signal come in. Daily buy. OBV looks great daily. Looks okay weekly. Might be worth watching AXLL. Let's take a look at this in an HGSI chart. Georgia Gulf, diversified chemicals, earnings suck, 2.9% dividend. Broke above the 50, retested. Probably goes higher from here. Hence why it's on my list. KBR, which is a construction company, another high closed doji, but sort of in an uptrend, it doesn't count. Strong volume on daily and weekly. The bongos are green. And lastly, Caesars, which has had all kinds of bankruptcy issues. Some of it's probably getting behind it. It made my list because of the high closed doji and strong OBV. I'd pass on this one. So now that I've got my watch list, I'm going to pick my favorites. I could have picked several of these. I picked Beat, so we're going to look at it in a couple of minutes. I take these stocks and I put them in a watch list. And I watch this watch list, and I'll add each day's list as it comes in. And I will monitor this during the day, looking for all kinds of signals, whether those signals are my usual green candle low, red candle high, squeezes, ISO failures, mobile breakouts from a squeeze, pocket pivots, viable gap ups. But more important, and we're still bringing in data, I'm going to watch it for breakouts and reversals with John's indicators. So I do that. I got too many stocks. I'm going to have to remove some. The other thing that I like to do is I like to pick a couple and put in trades in case I'm going to be busy tomorrow. So the stock I picked today is Beat. Beat is in the healthcare medical devices. They make some things for cardiology, if I remember correctly. Had a big run up here on earnings. Earnings came out here. Then you see a couple kahunas, a eureka in the market, mobile breakout squeeze, Bible gap up, clear topping signal here with a low closed doji, breaking through the 17. You can see the relative strength drop below the S&P 500 and OBV turned down. We've now worked our way back above the 200. Everything is green here. Earnings look like they're coming in nicely into the stock, and I think it's getting ready to go. When I looked at it in TradeStation, I saw a high closed doji with a weekly buy. It's in a daily buy. OBV looks great on the weekly, looks great on the daily. All my bongos are aligned. And so I wanted to work this one up. So let's go back here. First, let's review last week's chart of the week. First of all, these are educational purposes only. It's more to understand how I make my decisions. Trading, especially options, which I often use, carry substantial risk. I do not warrant any expectation of return. I may or may not already have a position in what I present. I plan on taking trades that they execute so I can discuss the following session. I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I choose a specific stock or option strategy, and where I plan on taking profits or placing stops. So last week I looked at Greenbrier. Whenever you buy a stock that's in a deep pullback, it's a high risk and high reward scenario. I put my stops right underneath down here, knowing that there's a good chance it would fail. I would only take it if it took out the PSAR dot, and I had interest because the kahuna, the pocket pivot, close to the PSAR, and a mobile breakout from the squeeze. I was concerned that my weekly bongo was red. Here was the plan. In white was my buy point, which was at 39.20. My target would be 44.18. My stop in red at 34.22, corresponding with the most recent last conditional change. I was taking a big risk of about 12%, and I was only interested in buying 400 shares. The earnings came out a few days before the meeting, and they had a beat and raise, which is what I find attractive. So, post-mortem, I traded up on Monday and got filled, traded up to what was last month's monthly support or monthly resistance, and the stock rolled over and came back. Now I'm sort of in the point where I was looking at it. I have not failed at this point. I am in a squeeze. I am well above my stop. And at this point, I am in this trade. And I'm going to leave the stop as it sits and continue to trade it. But once again, what we're seeing is these stocks break out and quickly fail. I don't think this one has failed yet. And I'll leave my stock intact and we'll continue to trade. Just go look at it in TradeStation real quickly. Oh, did I lose it? We went into a daily sell. I'm still in a daily buy. You can see it ran right up to support on the weekly. Here's the resistance here. Here's the resistance here. But well above my stop, so I'm going to continue to hold it and watch where it goes. Lastly, my choice for this week. Looked at a lot of things. As I mentioned, we took beat. I showed you the chart before, closing above the 50, turning green up above. Number of bullish signals coming in this past week. So here's my plan or my assessment. It's a PPS. Let's look at it in TradeStation where it's cleaner. High close doji on the weekly and a weekly buy. Strong OBV. Daily buy. Daily OBV above moving average. All my bongos are green. I've set my buy stop, my target, my sell stop. 1430 is my buy stop. 1560 is my first target. 13 is my sell stop. Assume a risk per trade of $2,000. Risk is $1.30 per share or 9%. I can purchase 1,500 shares. Now, I do like to trade options, but this is probably not a trade for options. It's a cheap stock, BEAT. So if I was to look at a December option, let's go to single. An at-the-money December option would cost me $1.45 versus $1.05. So let's say I got it for $1.25. That means I'm paying 8% of the stock price for 40 days of the stock. That's too expensive. And I would pass and I would take the stock and not the option. I always look at the options. I trade directional. I do verticals. I do synthetics. And I sell put spreads in a bullish market as well. Based upon that 8% cost of the option, I'm not going to look at an option. So that's my plan. Last thing, for those in the PUG group, I sent out a note today. We're going to have a meeting on Thursday. Stay tuned to invite those who are not PUG members that would like to find more about it. Feel free to email me at hgsidoc@gmail.com. Membership requires HGSI and TradeStation with John's lifetime set. And our mission is to help you become a better trader using our favorite tools. Good night, everybody. Talk soon.